Morning, everybody, and happy Monday. You guys are all doing well. Straddling in here for really what I think is going to be the second to last real sort of meaningful trading week in terms of news flow. Once we start getting to the week of the 23rd, I think things are going to slow down meaningfully. So just as an FYI. We're here just about, 1 minute or so before start, actually probably even less. If you guys can hear me okay and you can see the screen here, just quickly maybe give us a quick shout out in the chat box. That would always be awesome. And good morning, everybody. Oops, hope you guys are hearing me well. Let me see here. Here we are, checking the cameras are working, and then we're going to get started here in just a second. All right, here we are. All right, let's just get started since it is Monday, no reason to beat around the bush. Again, welcome everybody, happy Monday. It's the 9th of December. I'm Serge Berger here from the Steady Trader. This is our Set the Market morning show, 10-15 minutes to get right to the things that we are looking at sort of front and center. Couple things. First of all, I want to make you aware of a new podcast that just dropped today. Then I want to quickly preview CPI and the energy market, and then gold and China. So 4 things we should be able to knock this out in the next 10 minutes or so. Let's start off with the first thing, which is the new podcast that just dropped, which basically means that you need to be subscribing to the YouTube channel here in order to get these things sent to you live, meaning you're alerted in real time when these things are dropped. So please make sure you subscribe to the channel and you give us a thumbs up like. And if you subscribe, you should have already received this morning the link to this video here that just dropped. And what this is a interview that I did with Eric over at Simplify. They have a whole bunch of really, really cool ETFs. And as you guys know, like these are never promos. Like I don't pay them, they don't pay me for these interviews, but they have a new ETF that they launched. And again, no one's getting paid here, but I think it's interesting because I know a lot of people are thinking of this these days. And again, so go watch that interview. I'm going to quickly drop it in here as well in the chat box. There you go. So you have the direct link in the chat box here. But one thing that we talk about is getting exposure to equities and Bitcoin in one ETF, which obviously we know, there's a lot of directional risk there in that. But nevertheless, we know a lot of people like to keep things simple. So they have an ETF called SPBC, S as in Sam, P as in Peter, B as in boy, C as in Charlie. And it basically owns, there's equities in there, and Bitcoin, to keep it very simple. And if you were to chart that versus the S&P 500, you can see that the performance is actually I have to show it to you a different way because that's totally not what I want to show you. 1 second. Let me show it to you a different way. 1 second. Let's go back to graphs and performance. There we go. SPBC. There you go. All right, so you can see that the year-to-date performance of this ETF is up 43.9%, right? And that is versus the S&P up 29%. So again, not a promo, but I know a lot of people like to keep things simple. So and some people do like to have that Bitcoin exposure, and some people do like that idea on of owning it all in one ticker. So SPBC is one way of doing that. That's number one. Second thing is CPI this week. I'm actually watching CPI. It's on Wednesday. The reason why I want to watch it is because I do think that we are going to get higher CPI reports once again. We're already have seen this in different different indications of higher inflation for longer. You guys know I've been talking about that here for some time. And we think the energy market, the energy equities, could get another bid. We had a couple of down days last week in energy stocks, the big ones, particularly Chevron, which was down 2.6% on Friday on the back of an acquisition. And then we also had ExxonMobil, which was holding in a bit better, but still also down over the past few sessions. And I think if we have a decent CPI report, meaning somewhat strong, then we could once again get the energy market to start picking up to the upside. As you guys know, it's our favorite sector going forward, the energy sector. So that's that. So those are two things to watch. The third thing that I would like to draw everyone's attention to, or at least that we are watching, has to do with gold before we get to China. So we actually think that gold is now in a consolidation period. And part of the reason for that is, in our view, the appointment of the Treasury Secretary that is talking about becoming somewhat or maybe a lot more fiscally responsible. Whether that happens or is even possible, we will find out, right? I'm not here to make forecasts, but I do think it takes some of the bid, and I say some of the bid out of gold, even if only for a while. So I remain long gold personally. I haven't bought any puts yet from a hedging perspective, but I might. This morning, gold futures, as we're here live, are up about 1%. So gold futures are doing well. But I wouldn't be surprised if we're going to be in this consolidation period here for a little while. So I don't think gold is that blind, just being long momentum trade anymore right now. It was. I still like it. Again, there's a lot of tailwinds, but I'm not sure it has near-term momentum as much as it had throughout, certainly the third quarter and the first quarter of this year. We had a sort of a consolidation period in the second quarter heading into the third. So that's where we are on gold. Just wanted to give you a little bit of an update on that. And then the fourth thing is China. So if you look at China overnight, we'll just look at the HSI, which is the Hang Seng Index. And I know we should be looking at things like the Shenzhen and so forth, and those regional indices. I just don't have the tickers here right now. But even the HSI or the Hang Seng was up 2.3% last night. The reason for it is because China announced to basically be more supportive with more fiscal policy and more supportive for growth monetary policy. So both. And so essentially, if you look at this through the lens of just price, and obviously this is an oversimplification because we do need to take into consideration what actually was the news flow that led to this. But you can kind of look at it this way: if the first wave of news was this stimulative news in September, and I'm actually going to make a weekly chart out of this. This is the Hang Seng. We could be looking at FXI or KWeb, but I think the first move that we saw with that news in September was really, the initial move that kind of started getting things moving and breaking from higher lows higher. What we then saw is consolidation, and I wouldn't be surprised if we're now starting to see the leg of the second wave. I'm a little bit more reserved to jump into this just yet because of where we are in the year, but this is like brand new and top of mind here. So we're going to be watching this stuff very closely over the next days and weeks. But I'm actually quite close to maybe adding China back on. Basically, we have a new momentum trade. So if you're using the trender indicator, for example, then, and you just were to pull up the HSI, the Hang Seng Index, you would see that today's move, when China, of course, is done trading for today, Monday, today's move is actually giving us a new TSD trender momentum buy signal. That's just momentum. The trend actually remains intact. We now have a new bullish trend, but I just want to point this out. So it could be that we're having the second leg now underway of that first leg from September into October that I thought was the initial leg worth watching. And then again, we've consolidated since then about 17, 18%. And now it's looking like we may have the second leg. How high can that second move go? Well, again, we can keep it really simple and just say, let's say the first leg started in September, and if we were to get the same move that we now had, in the initial move, then let me just literally duplicate this. Then we could see a move, right about there actually. So that would be from here. Would be maybe another 20, 25%. Again, I'm not necessarily expecting that to be in a straight line, but something worth watching. So that's that. Let us know if there's any questions. I'm happy to stick around another couple of minutes. But it is Monday morning. We're heading into an important week of economic data. I talked about micro seasonality last week on Thursday. And if I can find the chart, I would like to quickly show it to you. I don't think I have it here. Let me just have a quick. Oh, here it is. Here, this is the chart that I showed you guys on Thursday. I believe I showed it to you guys. I've been showing it everywhere I could. And this is the micro seasonality for the month of December. So basically, the way to read it is that the average seasonality for December for the past 30 years, between more or less now to about the 20th of December, is a little bit of consolidation. You can see where we are right now in the S&P. So it's possible we consolidate a little bit, and honestly, this could literally be sideways. It doesn't even have to be down. But that's also why I'm kind of thinking that we may not blow higher right away here. We may want to get through CPI, and then next week's Wednesday, Thursday. Is it next week? Let me see. Yeah, or the 18th, of December. Let's go with that Fed meeting. So anyway, those are the top 4 things here for today. If there are no further questions, we will leave it at this. Let me see if there's more questions here coming in. Let's see. HSI, not in Rover, nope. But what is KWeb and FXI. So if you type in KWeb in the market Rover, you will see that it's there, and it's going into a new bullish trend. So, or even FXI. This is a question from Stephen Roth. He's asking, is FXI or actually he's asking about the HSI, but FXI, which tracks those things, right, is in the market Rover. So you want to watch those, and I think we could probably be getting a new buy signal here before long. So the point is, it's bullish trend, right, and momentum has now shifted as well. Question from Mike is asking, with inflation not going away, do you expect the Fed to slow down on interest rate drops and slow down equities? Well, if the Fed drops rates, that's not necessarily a directly mean that in fact that there's not much correlation of that and equities going lower. What would have to happen is you'd have to see the Fed dropping rates because the economy slows. Right now, they're dropping rates because I think they want to get interest payments under control. That's my view. But yeah, I guess that's... Look, well, I can tell you what's not going to happen next year. We're not going to have another 30% year in the S&P. The S&P is up 60% in 2 years. That's not sustainable. We're going to have much more of a trading year. I'm not calling for crashes. I'm not even calling for a down year. But I think we're going to have a lot more ups and downs this coming year. And so the people that are used to now buying things and buying their latest chart chasing stock and seeing it blow higher every day, that's probably going to stop working. And a lot of people that are now high on stocks that go vertical are probably going to lose a lot, but probably going to lose 50% of their account value. That's typically how it works. And so we want to be in more of a trading environment is really what we're calling for. So that's why I'm trying to prep you guys for all this here in these morning thoughts. So thanks folks for joining. Please give us a thumbs up, please subscribe to the channel. That allows you to get in real time alerted when we have a new live analysis. And also please make sure you catch the podcast interview that just dropped today. Again, it's on the website, on the YouTube channel, I should say, excuse me. And I dropped the link here into the chat box as well. Let me bring it over to you so you can see it again. It's this one here. So just go watch that. I think it'll be very informative for you about, sort of what's happening in the market from, an expert like Eric. And we also talked about this SPBC ETF as well. Thanks for joining. We'll see you guys back here tomorrow morning. Again, please subscribe, thumbs up, and we'll see you back tomorrow morning. Thanks for joining.